Hello guys, this is FairBinaryOptions.com, and under our Binary Options Academy project we are looking at one of the most complex, if you want, technical analysis structures that market or price may do, and I'm talking about the so-called double combinations. Now, why one of the complex? Because people have the impression or the tendency to think that such patterns are rare and not forming or they are not that common on the currency markets. Well, the thing is that these are extremely common on the currency markets, and especially this double combination. Now, first of all, on this first part we'll have a two-part educational project, and on the first part I would like to lay down the rules and the grounds for the theoretical things, and then on the second part to really show you one double combination that forms at the market. First of all, a double combination, like the name suggests, has two different corrections that are connecting by an intervening X wave, or the X wave should just make the link between two corrective waves. So first of all, you need to have a first corrective wave, let's say a flat, something like this, so this to be labeled A, B, and C, and then we need another corrective wave, but this should go in the direction of the previous trend. So if the previous trend was actually to the upside, then you have the first correction as a flat, then the second corrective wave, basically the X wave, should go all the way to the upside here, but the X wave, pay attention here, should not go more than 61.8 when compared with the whole first corrective wave. So what we need to do there is to take a Fibonacci retracement level to measure the length of the whole ABC here, and to make sure that the X wave does not end more than 61.8 retracement, because that would invalidate the whole double combination. So this to be the ABC, and of course an X wave, and then a double combination can be formed with another correction here most of the time. So in most of the time, something like more than 85 or 80% of the time, ends with a contracting triangle like this. So ABCX and then ABCDE, and of course price will break higher after such a pattern. The contracting triangle travels within the A and C and B to D trend lines like it is only normal, like this, and the whole pattern is being called a double combination, should be labeled as wave A, and the B wave to the upside, and the C wave, so A and B and C, and then the X wave, or the intervening X wave, that should not supposed to go more than 61.8 when compared with the first correction. And then, so this is the first corrective wave, the X wave, and then the second corrective wave. Well, the corrective waves can only be triangles or flats or zigzags, and that's it. Most of the times it is a contracting triangle for the second correction, and this is why we are labeling it as a triangle. So A, B, C, D, and then of course the E wave to the downside. So what do we have here for the whole pattern? So the whole pattern, this one, is being called a double combination from here to here. It is a corrective wave, it is a complex corrective wave. It's to be found as a fourth wave type or the second wave type, or only part of a complex correction as well. And it is being formed out of two different corrective waves. So this will be the first correction, the intervening X wave, and the second correction. It is possible that the second correction, so this is the second correction, it is possible that the second correction to be formed out of a zigzag, If it is formed out of another flat, that will be called a double flat. But if if instead of the contracting triangle you will have another zigzag, then it is being called double combination. So let's write on the screen here that this is being labeled as double combination. And it is one of the most common patterns or corrective ways to be found when trading currency markets. Now, when you trade binary options based on currency markets financial products, then the movements that the market make should be the same, and the trading decision should be based on it. This is the first part of this mini educational series that we have on the Binary Options Academy, and on the second part we'll apply this principle here on the recent US dollar Japanese yen move that we had to the downside that actually ended with a contracting triangle. So stay tuned for the second part, please, and keep in mind that this is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor here, Lionknife. So make sure you go and check lionknife.com. Bye bye.